How much does New York Life pay for short-term disability? New York Life provides short-term disability (STD) insurance that replaces a percentage of an employee's income if they become temporarily unable to work due to illness, injury, or childbirth. The exact payout depends on the policy terms, including the income replacement percentage, benefit duration, and waiting period. 1. Percentage of income covered. New York Life's STD policies typically cover 50% to 70% of an employee's pre-disability salary. The exact percentage is determined by the employer's plan or the individual policy chosen. Second, maximum weekly benefit. Most policies include a maximum weekly payout, which generally ranges from $500 to $2,000 per week, depending on the coverage level. Third, benefit duration. Short-term disability benefits usually last between 9 to 26 weeks, depending on the policy. Common benefit periods include 13 weeks or 26 weeks, after which long-term disability insurance may take over if needed. Fourth, waiting period before benefits begin. Most New York Life STD policies require a waiting period, elimination period, before payments start. For illness-related claims, the waiting period is typically 7 to 14 days. For injury-related claims, benefits may begin immediately or within a few days. For maternity leave, benefits usually start after a short waiting period, and payments typically last 6 to 8 weeks, depending on delivery type. 5. Factors that affect payment amount. Employer plan variations. Benefits are based on employer-sponsored plan details. Offsets from other benefits. Payments may be reduced if the employee receives workers' compensation or other disability income. Medical verification. Proof of disability from a doctor is required for benefit approval. New York Life. Short-term disability insurance typically pays 50% to 70% of income, with weekly benefits ranging from $500 to $2,000 for a duration of 9 to 26 weeks, depending on policy terms. Click on the link in the description below to find out if you're paying too much for insurance.